Hey everyone, Mike Kinderleiter here with Powerwash.com and Powerwash University. Also tout myself as a Dean of Powerwash. And today I want to share with you, or this evening I should say, I share with you. It's a little late for some of you guys, actually about 8:15 here for me in the evening. And the East Coast people probably crashed out, or maybe you're up and trying to figure out what you're going to do with all the things that are going on with coronavirus and trying to plan on opening back up and how you're going to move forward with your business. And it is a situation for all of us, just trying to figure out how we're going to move forward and make things happen. But I think I really want to share with you tonight is some of the resources that I've come across, and actually I'm going to share with you a PowerPoint that I got from a webinar that I was in today, that was done by SCORE here locally in the Dallas and Fort Worth area. One of the groups that I'm a part of shared out, and I participated in that event, or watched the event, I should say, and I asked a couple of questions too. So it was, I think it's very informative, and I may have a few things to add to this that I've learned on top of that, because I've talked to my banker, I've talked to my attorney, I've talked with my accountant about all this, and everyone's becoming or I shouldn't say very, but becoming more and more educated on it. But the thing that's kind of slowing this down, where the CARES Act that was just passed by Congress and signed by Trump this past Saturday, or maybe it was Friday. Anyway, nothing's going to happen with that until the SBA rolls out the guidelines to the banks, because the banks are going to do that. So, but before I get too deep into the weeds here about what's going on with it, let me just jump into the PowerPoint presentation that I watched this morning, and I was fortunate enough to get them to share it with me so I could share it with as many people as I like. So I'm going to give you a brief overview of what they shared with us. So the coronavirus, the COVID-19, the Small Business Administration loan resource here has got a lot of funding and stuff and put together for disaster relief to help with the business community of how this is going to impact all of us. So real quickly, this is just an overview, and for us, I'm not going to spend a lot of time going into each one of these real in depth, but here we are at the Small Business Administration or assistance. That's the part of the act that really affects us. And you can see that, where their checks are going out for individuals, and there's a large company assistance, health support and care for that industry, and unemployment benefits for all this funding that's coming from the CARES Act. These are all the different areas and how they relate to one another. So how this is going to relate to us and the small business owners is with the Small Business Loan Program. You got these two separations that separate out here. And I think and I've heard a lot of confusion around this, and I hope this brings some clarity to it. But you have the portion that you can go online and begin the disaster relief application, and that falls under the disaster loan program. Typically, this is meant for disasters that are naturally existing, like from hurricanes or tornadoes or things like that happen. And because of what's happened now, the disaster relief program is just completely overrun, and so is the Small Business Administration with all these applications that are coming in. And they relaunched the website for this back on Monday. And if you're a small business and you're wanting to get and apply for a loan, then hit that link. It's in the Powerwash community. I think I got it at the very top. If not, I will. I'll put it in the comments below. But go to that link that the Small Business Administration has put out and go apply for that. It's $10,000 right off the bat. Basically, you're going to get it. And I've heard several times, and I've seen it in writing in some of the reports that have come out, that even if you apply for the disaster relief and you're denied, you will get to keep the $10,000. So I encourage you to go do that and get the $10,000. plenty of people are going to be going to get that funding to help them with their business. And then the other thing that's real important here is, and I'm not going to go too much into the loan application and this right here, because that's going to go on into the disaster relief program. I think the thing that really impacts us the most is the Paycheck Protection Program and how that can impact us tremendously. And as we move through this, I'll explain more, and how you're going to go about trying to get the Paycheck Protection Program. This one right here means a lot to us because it has forgiveness in it. But before we get too far there, let's just kind of talk about the two different loans here and how they're set up for coverage. So the first one here is Economic Injury Disaster Loan Program. You know, its purpose is meant to cover the cost of employee salaries, mortgage, insurance, rent, and other debt obligations. And this is directly intended to go through the SBA. It limits up to $2 million per business. And you can see the different entities here: small business, which most of us are, 501(c)(3)s, nonprofits, independent contractors, which is interesting. Independent contractors is on that list. So some of us that may operate in that capacity can still go out and get or apply for this loan. Terms for up to 30 years. You can see the rates here for nonprofits compared to small business. You know, it's 2.75% and 3.75%, which is still great. Those are phenomenal interest rates. And you apply for this one directly through the SBA. So this is where you're going onto the website and applying for the disaster relief there. And I'm referring to disaster relief because that's how it's entitled. Fund disbursement will be directly from the SBA. There's no collateral required. There's no fees to apply. No penalty to pay down the loan early. And there's deferment on the payment for 1 year. So that's if you're dealing directly with the SBA. Now the Paycheck Protection Program, which I'm going to encourage everyone to go and apply for this. This is really important, and it can have a really big impact, especially if you have a lot of employees or a handful of employees. This can be very beneficial. So these loans are for the sole purpose to cover operating costs such as employee salaries, mortgage, interest, rent, and other obligations, debt obligations. Whoops, I jumped ahead, didn't mean to do that. And this can go up to $10 million per business. I doubt there's anyone that's listening to me that would qualify to get the full 10 million, but that's what it goes up to. Eligibility are small businesses. Again, that's most of us that would, or most of you that would be listening to me now. 501(c)(3) or 501(c)(3) nonprofits and independent contractors under 500 employees. Now, the 500 employee, there is a exception here, which happens to be for restaurants that have that are over 500 employees. But if you break it down by location, multiple locations, then they can go by the number of employees at those locations. So if anybody here is a restaurant that happens to be listening to me, which I kind of doubt, but if you are, because most of my audience is power washing contractors and those affiliated within the cleaning industry. The terms of the loan is for 10 years at 4%. The difference here is that you have to go to an approved SBA loan bank to get a loan for the Paycheck Protection Program. This part of the CARES Act that's going to support the small business will be done and administered through the banks. So if you already deal with a bank that you've got an SBA loan through, keep dealing with them. They'll be able to do this and get you set up. Now, the conversation I had with my banker today, she said, or she was telling me that they don't have all the rules from the SBA yet, so they can't really start the loan process. And when I was reading the documents, it said that they were supposed to have, I believe it was by April 3rd, but I think that's pretty unreasonable to think that they're going to have all these guidelines out by by this Friday. I just think that's too fast. So I'd expect it sometime next week. And I think I heard as late as the 14th or 15th that this could take up to. But anyway, I want to give you enough information to start getting you ready to prepare for it. So when the gates open, you can get to the front of the line and start getting ready to get this funding for your company. Let me go back to that document now. So these loans and fund disbursement, as I was saying earlier, will come directly from the SBA approved lenders. There are some other micro lenders and community development lenders out there. I don't know a lot about who those would be, but if you have someone like that that can help you and they're approved by SBA, go for it. Again, the nice thing about this compared to the disaster relief is that there's no collateral required, whereas disaster relief, there's no collateral required up to $200,000. There's no fees, there's no penalty to pay down the loan, and there is deferred payment for up to 6 months to a year on this pay protection program. So this is very beneficial for us as contract cleaners and anybody who has a staff or a group of employees. So to get accepted with this, you obviously they're going to look at your credit rating, your repayment abilities, whether or not they feel like you can repay the loan. An SBA case manager may ask for additional information before final approval of the loan after acceptance of your application by the SBA. Again, I'm looking at the disaster relief side of it. This is going directly to the SBA. And $2 million limit per business. Even those that have multiple locations, it still probably will only be $2 million limit. This is basically information that I got from SCORE today. That's what they're telling us. I don't think any of this is going to apply for most of us, especially at that high of amount anyway. We're small business owners, and we're not going to get up to that level. And then there are the emergency economic injury disaster grants. So this is what I was talking about earlier. If you go to the SBA website and apply for you're going to get a $10,000, basically a grant right off the bat. Now, the thing I'll point out is that if you do get the other loan, the paid for the Payroll Protection Program, you will have to take that $10,000 off of that loan as part of, let me rephrase that. That $10,000 will become part of that Payroll Protection Program that you qualify for under that system if you get this $10,000 here. And this has to be sent out within 3 days of acceptance by the SBA. And here it is again, does not have to be repaid, in bold. This is directly from SCORE. So you know that if you go and apply for this $10,000, you're going to get it. And if you're denied, you still don't have to pay it back. Now, here's the program that I'm encouraging everybody to take advantage of, especially if you have a group of employees. That's the Pay Protection Program that I talked about earlier, where you need to go talk to your bank. This is going to be based on the number of full-time and part-time employees that you have. And the coverage period that this is going to apply for is from February 15th to June 30th. So this will make more sense as I get into it. What you're going to have to do is go back and look at an average totally monthly payroll cost incurred during the 1 year period before the date of the loan. Now, there are going to be some exceptions here. And as this rolls out, you're going to want to talk to the loan advisor or your bank to look at this time period you're going to use. It's, from my understanding, it's an 8-week time period, and it can be used for different times of the year. Whereas some of us are steady, like in my business with kitchen exhaust cleaning and truck washing, we're fairly steady. So I can use the amounts for the entire year and get that average. Whereas you guys have a very seasonal business in residential cleaning. So you're going to want to pick an 8-week time period to come up with this average monthly payroll amount. Then you're going to take that average monthly payroll and you're going to and times that by 2.5 times. So let's say, for instance, your monthly payroll is $20,000. So you're going to end up applying for a loan in the amount of $50,000 because that's 2.5 times that $20,000. So I hope that makes sense. The limit on this is 10 million. Again, I don't know of anybody in the industry that will even come close to that. So when you're looking at this payroll cost, there are things that have to be excluded. You can't include anyone's compensation that's over $100,000 a year. Now, it's a bit of a gray area right now, but for the most part, I do believe that you can consider up to $100,000, but not over that. I'm sure that as time goes on, the SBA will make this more clear whether or not that's correct or not, or if you have to totally exclude that person from the payroll calculation for monthly costs. But right now, I believe from the several different people I've talked to, it will be up to $1,000 or $100,000 of that employee's compensation. You have to take out payroll costs such as federal taxes, Social Security, state unemployment. All those taxes have to come out of there. And if you're using any kind of payroll service or anything like that to do your check computations and put checks together, you're going to need to take that out of there as well. And then any employees that their principal residence is outside of the United States, that can't be included in there. And then if you have somebody during that time period that was on the FMLA, the Family Leave Act, and wages were being paid, that has to come out of there as well. And most of you, for under 50 employees, the Family First Corona Response Act won't apply to you. It does apply to me, but because I'm over 50 employees, but because we haven't got into that yet, and it starts tomorrow actually, the Family First Coronavirus Act. So if you're an employee with 50 or more employees, but under 500, this doesn't apply to the big companies, which I think is completely unfair. But so if you have 50 or more employees, you need to look in this Family First Corona Response Act, because you have obligations to your employees that become sick with the virus or have a family member that becomes sick with it, and you have to pay for time off that does not eat into sick time they already have or any PTO time. So just be aware of that. On the next slide here, we have the Paycheck Protection Loan forgiveness criteria. So this is where we're going to talk about how you need to consider, once you get approved for a loan, how you're going to spend the money that you get from that loan. And this is real important. So the amount of the forgiveness cannot exceed the principal amount. So you get a $50,000 loan, you end up using costs that come out of it that equals $60,000. Well, you only get forgiveness on $50,000. They're not going to give you more money. So your maximum amount that you can benefit for use is $50,000. So the costs that are going to come out of that, you're going to apply this to. So you get the $50,000. So each week when you pay your payroll, you want to show the payroll costs that are coming out of that $50,000 for each payroll that you do for up to 8 weeks. And you will continue to pay all your payroll costs out of that $50,000 for 8 weeks. If you have any interest on real property, mortgages or obligations in existence before February 15th, that will come out of that as well. Rent under lease agreement, that the lease agreement was in place before February 15th, that will come out of that. So, you know, I'm going to use an example here. So you want to be careful here. You're most likely, there will be a few of you that this scenario will play out to, and you want to be careful that you don't do what would be termed double dipping here. For instance, like I have different entities, but I have one entity that owns the property and the other company's rent. Now, I could say, hey, let's take the rent and write the rent off all the time, but I'm going to be double dipping if I then apply the interest on the entity that is paying for the loan. When it comes down to it is that I'm only going to get for most likely, and I would think that this is going to be the case, I'm only going to get to write off the interest or apply the interest under this. I won't get to do the rent because I am basically the rentor and the rentee. So only the interest on the mortgage obligation will get to write off. And if you're not, if you're just renting, then you get to apply that money toward the rent. The other thing is all the utility payments for gas, electric, water, transportation, telephone, internet, for those services that were in place before February 15th. And let me see if there's more. Okay, I do believe health insurance, which isn't listed on here, is part of that as well. So that would be another one. So if you have employees that you're paying for the health insurance, that would fall under this as well. So let's continue on with this. So once, let me read, will not be, okay, yeah, this is just saying that a business obtaining a loan through the Paycheck Protection Program will not be able to use payroll tax credits available under the Family First. So basically, what the Family First Act is doing is, let's say, for instance, because it applies to me, I have an employee who has to take off because they get the coronavirus, and now I basically have to pay them under this act so much a day. Well, when I go to file my taxes at the end of the year, as long as I'm profitable and I'm supposed to pay some taxes in, I get some tax credits back equal to what I was paying them. So it's really, the government's paying it, but I have to carry the note till the end of the year and I do my taxes. That will happen to you. That's only if you're over 50 employees. If you're under 50 employees, this won't apply to you. The next line here, you can apply for both the disaster relief and the payroll protection, but you can't use the funds for the same expenses or operating costs. There's no double dipping. You have to show that you're using those funds for different things. And I would kind of be surprised if you're going to be able to well, if you get both, you get both. But just make sure you do it right and you talk to your loan officer with the bank and you manage that correctly, because there probably could be some pretty stiff penalties and fines for double dipping, especially if they catch you. So the U.S. Treasury Department said as of March 30th that the Payroll Protection Program should be ready for small businesses by Friday of April 3rd. See, this is where I just don't think they're going to be ready by the 3rd, but we will see. I think it's more likely it'll be sometime within the next week or two. Payroll Protection Plan Forgiveness. So a business qualifies for small business loan under this Section 7A of the Small Business may qualify for loan forgiveness on portions of the SBA loan disaster. Now, this is where I was talking about earlier about how you want to spend these expenses. The borrowers that qualify for small business loans will be eligible to have only those portions of their loan forgiven for the amount spent during an 8-week period after origination date of the loan for payments related to that. So what this is saying, that all those costs I talked about. So once you get your loan origination date, once you get that, that's when you start tracking these costs to make sure that you can apply them and pay them off. So real quick, I want to make sure, when I was talking about this earlier, I was talking about, okay, yeah, I was. I thought maybe I had skipped ahead and was talking about two different things, but I'm just double checking. So yes, so again, once that loan origination date has been created and those funds are on their way, or either they're in their bank account, make sure you start tracking these costs. It's the same thing I talked about a minute ago, exact same thing there, that you want to apply and use those expenses for the payroll costs, interest on mortgage, rent payments, and utility payments, and other services as you expend this money so that you can have it forgiven. There are certain limits on how much will be forgiven, though. So this is where it's important. And how you need to be looking at your employees. So amounts in excess of the principal on the loan are not going to be forgiven. I talked about that earlier. So if you got 50,000, you're not going to be able to get more than, you're not going to be able to say, okay, I spent 60,000, now give me another 10,000. It's not going to work. Forgiveness will be reduced proportionally by any reduction in employees retained compared to either the prior year, the period of January 1st to February 29th of 2020, measured based on a average employee per month. So this is average employee per month. Another term I saw was full-time employee estimate. Full-time employee. Yeah, full FTEE is what it was called. Full-time employee estimate. So you're looking at getting a number for the estimated number of employees that you're employing full-time. There's probably going to be a lot more specifics on how this is calculated and how it comes up. But for me, it's easy to do because I can just look at the prior year. Again, I talked about you guys being seasonal. This is an 8-week period that they're showing here. We know that that's our slow time. So you really don't want to use a slow time. I'm telling you right now, you want to use a busier time so you can get a larger amount for your loan. So once those time frames that you can look at come out, you're going to want to look at those periods. The other thing you want to watch for is forgiveness will be reduced proportionately by any reduction in pay of any employees that's greater than 25% in the prior year's compensation. So if you're reducing the pay of your staff by more than 25% to get through this, they're going to start reducing the amount that you can have forgiven. I hope that makes sense. So be careful there. Payroll costs eligible for forgiveness do not include compensation paid to employees in excess of $100,000 annually. So again, I think this goes up to $100,000 and it stops, but we'll probably get some clarity here. Now let me back up to the average number of employees. So if you're, well, you know what? I'm going to actually answer that a little further down because I think we're almost to the end, but let me see. Okay, no. So nobody here, you know what? I'm just going to cover it anyway because I don't want to get it too far off. So if you're right here on this forgiveness portion and you have, let's say your average number of employees is 5. Let's just go with 5. You laid off the 3 guys and now you're down to 2 of your crew. But you're able to use those 5 guys and use the payroll, less payroll expenses and stuff, and use that amount times, then use that monthly amount times 2.5 to get your loan amount. But now you're only at 2 employees. They're going to reduce the amount of your forgiveness proportionately by that. So they're going to reduce it by 3/5 of the number of your drop in staff. There is a caveat to that. That's if you hire these employees back and put them to work. And the date, which should come up in here later, is June 30th. So if you're able to bring, yep, here it is right here. So if you're able to bring them back to work and have them fully employed by June 30th, this rule will not apply. Tipped employees, they have another way for doing that. I don't know how, if any of your guys get a lot of tips, but if you do that, you're going to need to investigate that a little more for your numbers. But so it says here, if borrowers rehire workers that have already been laid off due to the coronavirus within 30 days of the enactment of the CARES Act, so it was done on March 27th. So if you laid off workers now or within the next 30 days, right? This is what this is saying. So if the borrower it says rehires. Oh no, rehires workers that have been laid off due to the CARES Act within 30 days of next. So if you laid off workers within 30 days of March 27th is the way I read this, they will not be penalized or have loan forgiveness reduced by any reduction of employees or reduction in payments to employees. So as long as those workers are rehired by June 30th. So if you get them rehired and put them back to full employment before June 30th, that will negate the fact that you laid anybody off up until, what would that be? If that was March 27th, that would be April 26th or 25th, one of those. I think it's 26th. So let's go on. So any loan amounts that are not forgiven at the end of the year is carried forward to a maximum term of 10 years at a 4% interest rate under the loan guarantee. remains under full term. So whatever you get, if you happen to get something that's not forgiven, then there you go. Now here we're going to talk about the SBA Bridge Loan. I'm not going to spend time on this. I really kind of just tuned it out. I apologize for that because it's only up to $25,000. And this may be something that just like holds you over in the meantime for to get you ready for some other things. But I apologize. I really didn't tune in to the bridge loan because I didn't really feel like it applied to us that much. And then the SBA Debt Relief, again, this is another program for small business to overcome challenges created by the health crisis. I'll leave this up here. You can pause it and read it. Again, it's not something that I felt like was of big interest for you guys. And then here's who I actually got this PowerPoint presentation from, was at Tarrant County SBA, and I was going to in North Texas SBA, SCORE Fort Worth and SCORE Dallas. There's a phone numbers. If you happen to be in the local area, you can reach out to them. They can give you support and help, or reach out to your own local SBA chapters and stuff to help you as well. Now then, let me stop the screen share. So there we go. So now I'm back to it. So here's the thing you want to think about. It's really important if you have this. So you definitely want to go after this portion of the funding if you have any employees. And I specifically asked the question of my accountant, is there anything about this that would disqualify me for going for the loan? And unless there's something that comes out from the SBA later on that we're really not aware of right now, that these documents don't reflect, anybody they're trying to keep people from going on unemployment, and they're trying to keep business to keep these employees hired and keeping the economy moving and things flowing. That's what that money is for. So if you have employees, you have staff, and you can get them fully hired and keep them hired with this money, that's what they want you to do. Find things to put them to work, do other things with them, but just keep them employed. Clean up the shop, clean up the yard, whatever it is you're going to do it. So this is just a benefit for all of us out there that are suffering from the impact of the pandemic and how it's impacting the economy. This funding is going out there to help anybody with employees and to keep them employed. Unfortunately, we had to do a small layoff, but I think because of this act that we will be able to hire all those hires back. So if you have any questions, go ahead and post them in the comments. I'll do my best to answer them or find someone who can. Again, I'm Mike Hinderleiter, Dean of Powerwash with Powerwash University, Powerwash.com. Thank you for tuning in. I hope this helps out, and this explains a lot in helping your understanding with the funding that's out there. So again, I'm going to say one more time that you have the Disaster Relief Act, which a lot of people have been going after trying to get those funds. You automatically get $10,000 from the Disaster Relief Fund. Just go fill it out. Put in your information. It takes less than 30 minutes. Then you have the loan that's being the Payroll Protection Program that's coming from the SBA, but it's going through the banks. You need to find a banker that does SBA 7A loans that is qualified to offer these loans to your company to get that funding, and then just spend the funding as it outlines and make sure you have enough employees to hire at the end so you get that forgiveness when it's over. So again, that's all I have to say. I hope this is helpful and you got a lot from it. Go out there and get the funding. Good luck, and let me know how it works out for you. Take care.